Good morning and welcome to GrainTV for May 17, 2012. To my right is Cody Bills and I'm Brock Shimbano. Today is Thursday, so that gives us the USDA's latest round of export sales reports. Cody, how did we fare this morning?
Well, the weekly export report was a little bit weaker than expected for corn and soybeans. However, wheat did outperform. Let's take a look at the numbers. Corn came in at 339,000 metric tons in the old crop, beans 616,000 metric tons in the old crop, and wheat 321,000 metric tons, but also booked 389 in the new crop. So this is going to be good for wheat, add a little bit of fuel to that rally that we've seen the last couple days. Let's take a look at corn. We're on pace to meet the USDA forecast after being ahead of pace all year long. We declined 11 million bushels as a result of this week's sales report. This week and last week were disappointing. We were below what we needed to continue to outpace this USDA report. Next week and the weeks to come are going to be very important to define whether or not we can meet this USDA forecast. For beans, though, it's a different story. We're ahead of pace 26 million bushels, and that's taking into account the revisions that we saw in last week's WSDA report. Right now, this week, we increased 8 million bushels as a result of that bar right there. It's very good. And as you can see here, coming down the line, the remaining part of the marketing year, we don't expect to see very strong sales. However, I mean, we could just get mediocre sales. And I think we're going to beat the USDA expectations. I think most likely what that means is that the USDA will have to revise up again.
Yeah, helping us to meet those sales in the weeks to come. We saw even in the overnight China purchase 480,000 metric tons of soybeans for this year's delivery, 11-12. But keep in mind, they also China said that they're going to release 600,000 metric tons from their state soy reserves as well. So that's going to relieve a little bit of their import needs in the next couple weeks or so. Keeping on the fundamental front, the Energy Information Agency also came out with their weekly ethanol update yesterday for the week of May 11th. What we saw there was production is actually up about 0.78% from last week and 0.44% over last year. But stocks was the big surprise here, that we were actually down 3.5% on the stocks compared to where we were last week. So these two factors, the increase in production and the decrease in stocks, gives us an implied demand that is at the highest level since December 9th, 2011. So that's a little bit of good information coming out of the ethanol industry moving forward here.
Yeah. Well, we'll take a quick commercial break, and when we're back, we're going to take a look at the dollar. We're going to take a look at wheat and beans in the charting landscape.
Well, it's definitely earned me more money. Just like Decatur, they were paying 70 cents more for summer corn there in August. We were hauling corn 100 mile for 40 cents, and we're making 30 cents, and I wouldn't even known that price was probably on there. I wouldn't have thought of calling Decatur, but when you go to the Grower's Edge page, then it takes all that running around out of it for you.
Welcome back to GrainTV. The markets are open in Chicago, so let's turn over the FireTip trading software for the live quotes. Old crop corn is down 1 1/4 cents. New crop is unchanged. Old crop beans up 26 1/4. Soybeans on new crop are up 15 cents. Wheat in Chicago up 8 3/4, and Kansas City wheat up 8 3/4 as well. Cody, the story that we've talked about earlier in the show, and it continues to be a story as we move through the session today, is the rally in the wheat market. We've seen some fundamental news come out lately that has really driven this market higher in the last couple sessions.
Yeah, I think there's 4 reasons why wheat continues to move higher. Number 1, we saw a downgrade on Tuesday of the good to excellent conditions in the U.S. I don't think that's the main reason why we're going higher, but I think that just adds a little fuel. Now, southern Russia, I think, is a major central reason why we are moving higher. Now, we have conditions that are very dry over there, and some people are saying that there's been irreversible damage in some of the regions. Not only that, but we had Strategy Grains come out this morning, and they downgraded their production as a result of winter kill for the European Union. Now, we saw them downgrade at 4.2 million metric tons down to 122.7 million metric tons, and we're talking about soft wheat right there. So once again, a downgrade for production of wheat. I think that's throwing a little bit of fundamental buying in. And then we have technicals. Now, what do I mean by technicals? Well, if you look at the chart, we've been trending down. We cupped this area, and we broke through that 613 key support level, which would mark most likely another move down. Now, we did make a slight move down, but $6 held. Now we have a $6 support, and we crossed back over that 6.13. So any trend following money that got short there, expecting another leg down, could have had their stops triggered, and what we see is potential short covering added to the fundamental issues that I just discussed, and I think that's a reason why we are up very sharply yesterday and why we're up on the board this morning.
Another point technically too is that we have now moved back above the 50-day moving average on this Chicago wheat contract, so that's going to add some more technical support underneath this market for the time being.
Absolutely. Hey, if you have any questions about what we're talking about today, give us a call at 877-472-4607. Follow us on Twitter. We'll be tweeting on any sort of developments out of Russia. That will be very key, I think, for the wheat market in the weeks to come. So we'll see you tomorrow on Friday for the weekly wrap-up.